Welcome back to U.S. Farm Report. Trusted, timely, tradition.
A new study from Newsweek shows out of 1,500 Americans, the majority not only regularly eat meat, but view it as a healthy choice. And 81% say they consume meat at least once a week. And this Memorial Day weekend means it's a long weekend with more cookouts, which is good news as it's also firing up meat demand. As the unofficial start to grilling season kicks off this Memorial Day weekend, it could be a big weekend for meat demand.
From what I've seen of the weather forecast, it looks like we're going to have clear sailing for firing up a lot of grills.
Favorable weather could help entice more cookouts, even as inflation is dampening some of that demand.
The first thing I'm going to say is it's still very good. Now, with that said, are we clearly seeing signs of softening demand across all species? We absolutely are.
And with the Federal Reserve weighing the possibility of more rate hikes yet this year, the impact on meat demand is something economists are watching.
We have some things we need to be watching, and certainly as inflationary pressures, recessionary threats impact consumer spending, we're seeing it in the meat case.
There's no denying that inflation has put pressure on many Americans. Kansas State University economist Glenn Tonzer is watching that closely with the monthly meat demand monitor.
Specifically about the middle of 2022, depends on the cut and the species and the product of what month I'd say it peaked, but somewhere between April and July of 2022 is what I would call the peak.
Tonzer says you have to keep in mind that while demand did peak, it was at historically high levels. And today, domestic demand is softening.
My opinion is that the broader macroeconomic situation, and even more narrowly, personal finances for many households, are putting a pinch on wallets.
The surge in meat demand, despite higher prices, happened longer than many economists even thought. One reason may be the number of Americans who built up their savings during the pandemic from less travel and staying at home more. Add to that all the pandemic payments from the federal government. According to IRS data, 3 rounds of stimulus money created more than 476 million payments, and the grand total, more than $814 billion.
And that allowed a bigger cushion to absorb higher meat prices, and households remained willing to do that for some time as long as they had those built up savings.
Now that those pandemic payments have stopped, households have chewed through those extra savings, and inflation is also weighing. That's why Tonzer says the meat demand monitor shows financial sentiments are waning.
We ask how your financial situation for your household is now compared to 1 year ago, and there's more people that say it's worse, and there's fewer people that say it's better, both compared to April of 22 and April of 21.
There are still several silver linings, and one of those is the longer-term trend in meat demand.
Meat protein demand in the U.S. is still higher today than it was before the pandemic. So this is not doomsday per se. It's comparing to a fairly high peak that we had, roughly a year ago in many of these metrics. So yes, demand has eased, but some context is important.
Don Close says at the retail level, the current price spread on retail pork versus pork cutouts is creating a very unusual situation.
The retail pork prices are softer than they were, but still right at their highs. But the price spread between retail pork prices and pork cutout values is incredibly wide.
But beef is seeing the opposite story play out. He says even with the current drop in cow slaughter, the percentage of heifers in the fed slaughter mix is still incredibly high, a sign liquidation will continue.
Because of the weather influences, particularly across the northern feeding states, this market has performed as if it is a sprint, and this market is a marathon. We haven't got to our tightest numbers yet, so this market will, by all rights, should continue 23, 24, and even into 25.
It's a situation meat packers are also grappling today. The latest Sterling Profit Tracker shows beef packer margins have declined significantly from $177 per head a year ago to just over $23 per head profits today.
If you look at packer earnings across the board, and even all species, I have been surprised at how rapidly those earnings have eroded.
Americans are still hungry for protein and specifically meat.
The public wants meat in their diet. I think their ability to pay for it is going to improve in the next 24 months. specifically on pork and chicken.
And closest request this holiday weekend to help that demand? Well, it's short and sweet.
I just encourage consumers to go out there and fire up those grills.
Driving demand one grill at a time as peak summer demand heats up. Now, Don Close thinks cattle contraction will continue, and that means even higher cattle prices in the months ahead. But do our analysts agree? Mike North and Chip Nellinger rejoin us for our Marketing Roundtables next.